eventually we will listen. Now the question is, who will listen to the voices of the school owners? The school owners may not have a choice, but may not have a choice but to just comply with the taxes as they are. So the purpose of this webinar is to bring to the attention of all the school owners and the stakeholders about the new taxes that have been introduced and how such taxes will affect their businesses. The school as a business is affected by many factors, from political factors, economic factors, social trends factors, technological factors, ecological and legal regulatory framework factors. What do I mean by political factors? You know, even the issue that we are discussing today about taxes is a political decision. It is the executive class that decides whether to raise or to lower taxes. And taxes are affecting the schools in a big way, because when the parents who are the customers to the school are taxed heavily, their disposable income reduces, and therefore they struggle to pay school fees. In terms of economic crisis that the country is experiencing, where most of the parents or citizens of Kenya are unemployed, this means that the parents are struggling to pay school fees for their children. The recently released economic survey data shows that the level of unemployment in Kenya is 5%, which is not very true, because when you employ a graduate and you pay him a salary of 10,000 per month, would you really call that employment? So there's a huge problem that is about the economic status of the country, and that is affecting school as a business. How do we strategize so that we move forward in a way that the school business will not only survive these challenges, but also thrive? In terms of social trends, the social trends that are changing, and I'm discussing in the context of a school, that we are seeing teachers and directors of schools having a very challenging moment trying to dispense and administer education to learners, because the learner of today is very disturbed, very unsettled, and because there are so many forces that are demanding for his attention, from the social media, from the tablets, from all the electronic gadgets, from TV to smartphones, and the students and the learners, they are no longer concentrating as they used to be. But the school has to find a way of dealing with that situation. It is a recommendation that would be given at some point that teachers need hardship allowance, because teaching is no longer the way it used to be. In terms of technological changes that are affecting school as a business, we have the inception and the emergence of AI, artificial intelligence platforms. I, as a lecturer, I have had a very bad experience with the development, because when you ask a student, a university student, to prepare we saw the opening of schools for second term being delayed by 2 terms. Why? Because the country as a whole, we were experiencing floods, and schools were being used as rehabilitation centers for residents who were distressed by the rains. And I hope the government can really see how much school contributes to the welfare of the nation, and therefore give them a better allowance and incentives for them to conduct their businesses. Lastly, but not the least, is the legal regulatory framework, whereby we have so many changes happening on the space of education, from the introduction of CBC, and at the moment as we speak, it is not very clear where grade 9 will be domiciled at, whether it is at the primary school level or at the secondary school level. So there are those myriad of changes that are happening in the space of school. And I feel that if the school owners are not spoken to, so that they are motivated, they are inspired, they are likely to just drop the mic and say the business has become extremely difficult for them to continue operating. Because as I had said, unlike the farmers, unlike the doctors, teachers are likely to find it tough, and it's good that we just find a way of complying with the changing rules and the tax landscape, so that we are able to continue with our businesses. It is said, when the wind of change blows, there are some people who decide to construct very tall walls so that they can protect themselves from the effects of the wind. But others, they construct wind turbines so that they can harness the wind energy to produce electricity, and for them to use that electricity to benefit themselves. So without further ado, allow me to share my screen. I hope my screen is visible, that the presentation for the day is a tax presentation for school directors and owners. And school businesses have enjoyed numerous tax incentives and allowances for long because education is considered an essential service. The government has a duty to ensure that education remains affordable and accessible. When it comes to the school enjoying numerous tax incentives, because the government should make the education affordable and accessible. Currently, we understand the pressure that the Kenyan citizens are going through in terms of the proposal that has been given by the government that they want to introduce VAT tax on bread. So it is very unfortunate that there are also attempts by the government to start increasing or introducing indirect taxes on school services that are considered extracurricular activities. There's a proposal that swimming activities, picnics activities, and academic trips activities, they will be subject to VAT. However, even though it is said that for the longest the school has been enjoying numerous tax incentives, this is not likely to continue, because with the introduction of various taxes affecting schools as business, school owners need to be sensitized on how to comply with the new changes in order to ensure their business continue to thrive in the ever-changing and competitive business environment. Fortunately, as school owners, you don't have to worry about how to navigate the complex and complicated legal regulatory requirements, especially on tax matters, as you can consult with us and other tax experts there at your disposal, so that you can be able to navigate this journey, which if you are not guided properly, it can end up making your business to suffer losses and eventually even force you to close shop. About myself, my name is Dr. Alex Kamau. I am a school director. I direct a school called the Kasarani School of Excellence. I am also a business consultant. I have been consulting for the last 15 years with a company called Maina Kamau and Associates. It's an accounting auditing firm that is situated at Homeland, opposite Garden City Mall. I am a lecturer at Jomo Kenyatta University of Agriculture and Technology, also at Iriara University and Cooperative University. I teach business-related courses with the key emphasis on tax. I am a board member of several primary and secondary schools, and I'm also a CBC parent. So I am able to to consume the education services, to produce education services, and I'm also an influencer. This is therefore to affirm about my credibility and authority on the topic of the day, which is eTIMS and other tax changes effects on school as a business. I like referring to myself as a guide or a coach with the aim of ensuring that businesses challenges that owners of businesses face, I come up with solutions for them so that I can assist the entrepreneurs and business owners to be able to do business better and concentrate on the key function of their business, which is to offer services. In this case for schools, is to ensure they deliver quality education services to the learners. Relevant tax changes. As I've explained, the main fodder for today's discussion is about eTIMS and other tax changes that has taken effect in this country for the last 12 months. I will start with eTIMS, then we discuss about housing levy, we'll discuss about NSSF changes, then NHIF, which is a National Health Insurance Fund, which very soon will be changing name to Social Health Insurance Fund. And last but not the least, we will also discuss about the proposed introduction of VAT, value-added taxes, on non-tuition income. However, before we dive into those tax changes that have occurred in the past few months, I would want us to first understand the context into which these taxes are coming to take place. Because if there's no business, then we wouldn't be talking about eTIMS, we wouldn't be talking about housing levy, NSSF, and NHIF. So what is a business? And what different forms can a business exist? Because the different forms that a business can exist as also determines what taxes this company will be subjected to and what tax rates this company will be subjected to. So we have three main types of businesses, and many schools are registered. We see schools being registered in different forms. Some schools are registered as a sole proprietorship business, where we have a director as the main person. Some are registered as a partnership business, where we have maybe two directors, and some schools are registered as a limited liability company. And the form in which the business is registered matters a lot when it comes to the issue of taxation. Allow me to move to the next slide. That's what I'm doing. And I start with the sole proprietorship business. This is when the school is registered as a business and is operated and managed by one director. Though this form of business has few advantages, the main disadvantage is that it uses the KRA PIN of the owner. This is a very dangerous way to run a school, as the personal PIN of the director should not be overloaded with numerous tax obligations that the school is supposed to file. What do I mean by that? That when you are running a school as a business, there are many tax obligations that you are supposed to comply with. They could be, you need to pay as you earn, you need to pay income tax for the business income, and all these should not be loaded on the personal PIN of the director. This is very, very important. The director who allows his PIN to be overloaded with the many business obligations as far as KRA is concerned, risk his PIN being suspended by KRA in the event of tax non-compliance. And I would want to really insist on this, because your personal PIN as a natural person will always be your personal PIN. You cannot get a second. You cannot get a second KRA PIN. So in case it is suspended, because of taxes in compliance or other factors beyond your control, you can never get another KRA PIN as a person. But for a business, if the worst comes to the worst, then what you can do, you can even rebrand the name of your school and come up with a new name, register a new name for the school, and you continue to operate. So that's why I'm saying the PIN for the director should be protected. Why am I saying that? Is because this can incapacitate the director from accessing vital and critical services that may require him to have a tax compliance certificate. And what is a tax compliance certificate? Is a document issued by KRA to a taxpayer to demonstrate or illustrate that this particular person has been compliant in terms of filing and paying all the taxes. How can a director who is currently using his personal KRA PIN to run his school do to remedy the situation? To remedy the situation, the director ought to incorporate the business name of the school to a limited liability company from where a separate and distinct KRA PIN will be issued for the school business. The director after that can proceed to register all the required tax obligations on that PIN. It is very, very important. It is very, very important. We have seen people wanting to participate in tenders, but they are asked about a tax compliance certificate they don't have. People wanting even to offer themselves for political positions, but they are not able to get a tax compliance certificate. Why? Because they registered their personal PIN to do some businesses, which they ought not to have done that. I got to the next one. I don't know where it is. The one for partnership. So when we move from sole proprietorship, we go to partnership. And this is a form of business where it is owned and operated by more than one person. It could be two. It could be two or more directors. The union or the relationship between the two directors or partners is governed by a partnership deed document. However, the partnership the partnership form of a business is somehow senior to the sole proprietorship, because upon application for a partnership PIN, KRA processes a business PIN that is unique and distinct from the personal KRA PINs of the directors. What I mean is that a partnership business can be issued with a KRA PIN by Kenya Revenue Authority. That is a bit better, because many of the tax obligations for the business can be pushed or can be effected through the KRA PIN of the partnership deed of the partnership. However, if partnership deed says, one of the clauses of the partnership deed is that the profits and losses of the business will be shared either equally among the directors or using a certain sharing ratio. So even when it comes to responsibility of paying taxes, if the business is supposed to pay taxes of about 100,000 and it has two directors, and the profit sharing ratio for those two directors is 40-60, the KRA system will still push the 40,000 for the partner who is sharing profit at a ratio of 40%. The 40% of that taxes will be payable through the KRA PIN of that particular director. And for the other director who shares profit of that partnership at a rate of 60%, then equally, the taxes for business, 60% of the taxes of that partnership business will be paid through the KRA PIN of this other director. Because KRA has a way of bypassing the KRA PIN for the business when it comes to payment of taxes. The directors are required to pay taxes on their personal PINs according to the agreed profit and loss sharing ratio. Now, what do we do to avoid this? Because still it's not it is not the preferred position. So the preferred position, and to remedy the situation, is the directors are required to incorporate the business name into a limited liability company and be issued with a separate PIN. This is contrary to common understanding that schools cannot be registered as a limited liability company. Most schools indeed, if you do a quick research on eCitizen platform, you will find that most schools, and big schools for that matter, they are registered as limited liability company. The school, even the ones that are registered as a limited liability company, they started as a sole proprietorship, then perhaps partnership, and eventually they ended up being a limited liability company. The understanding and the purpose of starting a business is the business is supposed to outlive the founder. But if you really link and intertwine yourself and your business, then the moment you are no longer here, because it is a fact, it is a hard fact that you will not live forever. Then it means the school has been using your KRA PIN. Once you are no longer there and your PIN has been deactivated, then the school ceases to exist. So the best way to remedy that situation is the director are required to incorporate the business name into a limited liability company and be issued with a KRA PIN. So limited liability company. Here, the school is registered as a legal entity which is distinct and separate from its directors, Very important. And what that means, a company is therefore recognized by law as an artificial legal person and has the right to sue and to own properties. The key word is artificial legal person. This other person, a normal human being, is referred as a natural legal person. But when you register a company, it gets the status of an artificial legal person, and it is therefore provided with a KRA PIN. The director should register all the tax obligations on that PIN. So this is now where we get to see a clear distinction between a sole proprietorship and partnership vis-a-vis a corporate liability, vis-a-vis a limited liability company, because here you are issued with a PIN, and the PIN issued for the company what it means is that now the company is fully responsible and obligated to pay its own taxes. The advantage of this method of running a business is that if the KRA PIN of the school is suspended by KRA for one reason or another, the director's personal PIN is not affected. And it's good to know that when you are doing a business, you are exposed to so much risk, including like what we know about the Data Protection Act. Probably you take a few photos of your students, then you put them, such photos in your website, and before you know it, there's a story behind that, and you are being sued. Therefore, the director can continue to run other businesses requiring a TCC, such as government appointments, tenders, and loans, because now he has separated himself from his company. There is a very interesting concept that I would want us to discuss about business transactions vis-a-vis consumer transactions. And this will come so much in handy. When now we dive into the discussion about ITIMs. A business transaction, from KRA's perspective, a school director needs to understand the distinction between a business transaction and a consumer transaction. What is a business transaction? It is that transaction that will be used by the business entity when computing the tax payable by the business. A business transaction is that expense that the business plans to use it or to claim it against the revenue of the business, so that it can be left with the when computing for the tax payable to the government. So if it is a consumer transaction, then that will not be used for purposes of filing KRA taxes. This could be an expense such as rent that the business wishes to deduct from its revenue before arriving at the taxable income. So what happens at the end of the year, in the case of a school, is that all the revenue for the school will be added up. And we say maybe this school revenue per year is 10 million. Then only expenses that were exclusively and wholly incurred for purposes of running the school will be deducted from that revenue of the company, so that we can arrive at the profit of the company. And then that profit, we will pay taxes from that profit. Remember, as I had said, depending on what form your business exists, if it is a sole proprietorship business, then that profit will be levied taxes according to graduating tax scale. If it is a corporation, a limited liability company, that profit will be levied taxes at a rate of 30%. So the new tax law demands that. This is what ITIMS is all about, that such expenses should be supported by an ITIMS generated receipt, or else they will be disqualified when computing the taxable profit. So what is ITIMS? ITIMS is, and we will dive deeper into ITIMS in a few. ITIMS basically means Electronic Tax Invoicing Management System. So if you consider, if it is a director, the bus for the school is being fueled, you take when you are paying for the cost of that fuel, it is good to ensure that you are given by the petrol station attendant an ITIMS receipt. Okay, that ITIMS receipt is not enough by itself. You need to share the KRA PIN of your business, so that that PIN will appear in or on that receipt. And the moment that happens, that transaction will be transmitted to KRA system real time. By the time you are driving out of that petrol station, KRA will have known that that school has incurred a cost of 10,000 in terms of fuel. So when it comes to the end of the year, when you are filing for taxes, you will not need to even mention that. KRA already knows about that. If you fail to obtain an ITIMS receipt, this would be a huge blow to the school owner, as such a receipt would be required to, because such a receipt will be disqualified for purposes of claiming, for purposes of reducing the taxable amount. This would be a huge blow to the school owner, as they would be required to pay more taxes than necessary, and thus may lead to a business incurring huge losses. You can imagine your school has generated income of 10 million in a year, and all the expenses that you had incurred through that year, whether you bought some cereals, whether you bought some paints to renovate your classes, whether you bought cement, whether probably you bought some uniforms, stationery. If you failed to claim for ITIMS receipts, then they will not be validated by KRA. What that means, you will just be required to pay 30% of your total sales as tax, because KRA will assume the 10 million, that was the profit for that business. They don't want to consider what you paid. They say, this is your profit, pay us 30% of that. So to remedy that situation of ensuring that you don't find yourself paying more taxes, the school director should ensure that all expenses are supported by ITIMS receipt. For this receipt, again, allow me to insist for this receipt to be valid and useful when it comes to computing tax payable, they need to bear the KRA PIN details of the school as the buyer. Consumer transactions. These are transactions that, these are transactions or expenses that are incurred for personal use or consumption. They have nothing to do with the business. For instance, for instance, maybe a person who is an employed person who does not do any business. So at the end of the year, he doesn't file any business taxes. Such a person, whatever he incurs, whether he goes to a hotel or he has a personal car, if he fuels in a petrol station, he doesn't have to request for an ETIMS receipt because that is a personal expense and it will not be used for filing any business taxes. So that's the difference. And the problem would be when a director treats business expenses as consumer expenses. This kind of an expense will not be used in computing business taxes. Such a transaction does not mandate the buyer to demand for an ETIMS receipt from the seller, as the said expense is not to be used in computing business taxes due to its personal nature. School directors therefore need to be careful not to treat business transactions as consumer transactions, as doing so would invalidate such a transaction from being used for the purpose of preparing a profit and loss statement from where the tax payable by the school is determined. That marks the end of our first session. We plan to do, we have covered the first session, which was 10 slides. I will ask my colleague, CPA Walter, to come and present the next 10 slides, which is from slide 11 to about 20. He will take about 30 minutes. Then after that, I will come back and take you through the last slides, which again will be 10 in number, which will basically be talking about ETIMS. For now, I would request that we go for a 10-minute break. Right now, it is 10:35. We resume at around at exactly 10:45. And when we resume, excuse me, CPA Walter will take you through the next 10 slides. We have just begun the meeting. The main essence of this meeting is to talk about taxes, and more so with a key focus to ETIMS. What I've just done is to lay a foundation or a background on what we are coming to share. I can see Hilda Gare raising the hand. So I will allow Hilda to raise the question. Give me a minute. Hilda?
Hello, you can hear me?
Yes, I can hear you.
Okay, I wanted to find out, you have said that there are things like consumer transactions. I'm looking at business transactions that can come in, for example, if you're not using the school van per se, but somebody is going out on a trip or on an activity that is school related, maybe a meeting, but
Okay.
they're using their personal car and we are fueling. And then things like Mama Mboga, the ones that don't have ETIMS receipt, what happens in such cases? So there are two, a fuel that has been fueled on personal car, but for business purpose.
Please proceed. Okay, thank you very much, Hilda, for asking that question. Yes, you have asked about a school van that is being fueled to not for purposes of school activities, but it has been hired. Walter, if that's what the question was asking. Yes. And the question, as long as that income will find its way to the bank statement of the company, then it has to be treated as the income of the company. And therefore, what that means, you will need to have an ETIMS receipt, because if the income will find its way to the bank account of the school, every income that finds its way to the bank account of the school will need to be paid for taxes. And for you now to ensure that you don't pay taxes for that entire amount of money, you will need now to have a valid receipt so that you can claim for the fuel that you used or you incurred when you are going for that trip. It's very important that every other opportunity that you have to obtain an ETIMS receipt, it is highly advisable that you do so, because at the end of the day, at the end of the year, what will happen? KRA will send you as a taxpayer an Excel sheet with all the sales that you did via ETIMS and all the purchases that you did via ETIMS. This is where it is very interesting. In case there are some purchases that appear in your KRA PIN that on the Excel sheet that you have been forwarded by KRA, and you feel those expenses were not incurred for purposes of running your business, you can just delete those expenses. You can delete expenses from that Excel sheet that KRA will issue each and every taxpayer at the end of the year. Because reducing your expenses is advantageous to KRA, because what that means is that you will claim less expenses. And as you know, we arrive at profit by deducting expenses from income. So if you only claim a few expenses, the profit will be more, and therefore the taxes will be more. So KRA will have no problem you deleting some expenses, but they will have a very big problem, and actually they don't allow for you to add extra expenses. If the expense was not captured on that Excel sheet from the word go, then we have no space to add an expense. Subsequently, or on the other side, when KRA gives you at the end of the year that Excel sheet that contains all the sales that you did in terms of the school fees that you charged and received, the food fee, the school uniform fee, the trips fee, everything that went through that system, KRA will give you an Excel sheet, including itemizing all the transactions that were incurred, all the transactions that went through your bank account. Now, KRA on this side of income, they do not allow you to reduce your sales. They do not allow you to reduce your sales, because reducing your sales would amount to you wanting to pay less taxes. But on the other hand, they allow you to increase your sales. You can tell KRA that actually, that the income that went through my bank account for school is 10 million, but in the real sense, I had another 1 million somewhere that was also a school income, but has not been captured by your ETIMS systems. So KRA will automatically allow you to increase your sales. So it is very important that we differentiate those two. In regards to the question you have asked about Mama Mboga, it is very unfortunate that Mama Mboga may not be able to give you an ETIMS receipt. So the advice would be, until Mama Mboga is able to give you an ETIMS receipt, you need to start purchasing your fruits and vegetables and cereals from an enterprise or outlet that is able to give you an ETIMS receipt. This could be supermarkets, but personally and for the clients that we alliance with, they go to, for those schools that are in Nairobi, when you go to Nyamakema, if you want to buy cereals, most of those shops, they are compliant. You buy cereals, whether it is rice, whether it is maize, whether it is beans, and they will give you an ATM's receipt. And that will save your school millions, a lot of money, which could as well go to a tune of millions, depending on the size of your expenses. And I hope, Hilda, I have answered your question. So thank you very much. As I had requested, it is now 10:43. We take a 10-minute break. We come back at exactly 10:53. Kindly keep time so that we finalize on time. Thank you very much. See you after the break.
Hello, everyone. My name is Walter Gisheru, tax consultant at Maina Kamau and Associates, and I'll take you through the next part of our presentation, which will primarily focus on the different categories of taxes that are applicable to a business. So without further ado, I'll proceed to share my screen and take you through the section on various categories of taxes that are applicable to schools. Believe that you can all see my screen. So we are going to take you through taxes that are payable by schools. First and foremost, a school as a business pays both direct and indirect taxes. Direct taxes are taxes that are not transferable to any other person, while indirect taxes can be transferred to a subsequent party. A good example of an indirect tax is VAT. Often VAT is embedded within the prices of the various items that we purchase or a school can purchase, and such a tax is treated as an indirect tax. A direct tax, a good example of a direct tax is a tax by the name of income tax that is payable directly by the schools. However, the school as a business is exempted from charging indirect taxes on the services it offers. Currently, school business is exempted from charging indirect taxes with specific emphasis on VAT. The reason the schools are exempted from charging such indirect taxes is to make the prices of access to education affordable to the general public, and to manage those prices. That way the schools are able to offer good prices in terms of school fees and other services related to school. So the exemption of school from indirect taxes, this is an initiative by the government to make school and educational services in general affordable and accessible. Unfortunately, there is a persistent push by the government to introduce VAT on the school services apart from tuition fees. Currently, all services offered by schools are exempt from VAT. However, there is a persistent push to distinguish between curriculum activities and extracurricular activities in terms of charging VAT. Services being targeted for VAT include extracurricular activities such as swimming, academic trips, tours, as well as picnics and other services offered by schools that extend beyond the normal curriculum. So the government is trying to distinguish between the two and allow a school to charge VAT on all extracurricular activities, while the tuition element of the school would remain exempt from VAT. Therefore, in this presentation, we shall therefore concentrate on direct taxes that a school is required to pay. This is because for the indirect taxes, it is the responsibility of the business selling the services or products to a school to file their returns. What this means is that if a supplier is supplying any vertible services to a school, it is not the responsibility of the school to declare that income in their monthly or annual returns. This responsibility falls on the supplier of the services to the school. So for instance, if a supplier of, say, transport services or any foodstuffs is supplying to a school, the responsibility of declaring that income falls in the purview of the supplier and not the school per se. Therefore, our presentation today in this section will mainly focus on direct taxes that are applicable to a school. I'll move on to the next slide. I'll take you through the income tax. This is a direct tax payable by schools on the profit it makes at the end of the financial year. Depending on what form of a business the school operates as, it can pay income tax on profit using a graduated scale in the event that it is registered as a business name under either a sole proprietorship or a partnership. Earlier on, Daktari had taken you through the various forms of business, and this amounts to a sole proprietorship, a partnership, and a limited company. In terms of the mode of taxation for income tax, both businesses, the three categories of business are taxed differently. In a sole proprietorship, the taxation is made through a graduated scale, where in a partnership, the profits of a partnership are split between the partners in the partnership according to the ownership ratio. So for instance, if in a company, in a partnership, there are two partners, there are two directors, each with 50-50 shareholding. If the school makes a profit of 100,000, each of the partners will be entitled to 50% of that profit ratio, and they will pay that tax in their personal pins. However, if the school is registered as a corporate entity, it pays taxes at a rate of 30% of the reported profit. This school can choose a third option of turnover tax. Turnover tax is the simplest method to pay taxes done on a monthly basis. In turnover, the school or director is required to pay 3% of the total income received by KRA without deducting any expenses. The main distinction between income tax and turnover tax is the ability to reduce expenses. In turnover, you file your returns on a month-to-month basis, and you pay 3% of your total income as a tax payable on a month-to-month basis. The moment you file your returns on a month-to-month basis, you are exempted from filing an annual return. So in the income tax regime, a school will claim various expenses it has incurred. It will account for its revenue in terms of tuition fees. It will be allowed to less expenses that it has incurred to generate that revenue in regard to foodstuffs, rent, and any other expense that the school has claimed. And then it will arrive at a net profit. That net profit will be charged, will be taxed at a rate of 30%. In a turnover regime, on a month-to-month basis, you will file your returns and pay 3% of your income as turnover tax. This tax is usually final, and what a final tax means is that the moment you file your monthly return, you are not mandated to file any other return at the end of the financial year. So the school is supposed, in the turnover regime, the school is supposed to pay 3% of its total income, and the total income would comprise of tuition fees, food fees, transport fees, and any other extracurricular activities that a school is involved in. I'll proceed on to the next slide. Income tax is payable within a period of 6 months after the end of the school's financial year. A financial year in any company alternatively comprises of 12 months. So often, most financial years for companies end in December. That means that 6 months from the month of December usually falls due in the month of June. So for instance, the income tax for a school whose financial year ends on December is payable before the end of the month, the end of next month, which will be 30th June of 2024. However, not all financial years for all schools or businesses end in the month of December. For instance, the government financial year ends in June, and it's usually at the discretion of a company or a partnership to determine when their financial year would end. So the requirement is that once your financial year ends, if it ends in October, you're given a period of 6 months to file your returns. Failure to file this tax or within the stipulated time of 6 months attracts a penalty of 20,000 if you're or 2,000, depending on whether the school is registered as a corporate entity or a sole proprietorship. What this means is that after the end of each financial year, you're given 6 months to file your returns. If you are a corporate entity, which is a limited company, if you do not file your returns by the end of the 6th month, you're penalized at a rate of 20,000. However, if you're an individual, automatically all financial years for sole proprietorship or individuals end in December. So their returns must be filed on or before the 30th June of each year. So in the event that any taxpayer or any individual sole proprietorship fails to file that return by the 30th of June, they are penalized at a rate of 2,000 per year. The computation of this tax has taken a dramatic direction with the introduction of ETIMS with effect from 1st January 2024. Many school businesses may find themselves in a dangerous position as KRA may decline to acknowledge any expenditure that is not supported by an ETIMS receipt. With effect from January 2024, the government passed a law that any return that will be claimed as an expense from January 2024 onwards, it will be a requirement that that expense or expenditure item is backed by 1, an ETIMS receipt, 2, the ETIMS receipt must include the PIN of the taxpayer. So if you're making a purchase in a school, you must ensure that you get an ETIMS compliant receipt. You also must ensure that that ETIMS receipt directly includes the PIN of your school for you to be able to claim that expense for the purpose of income tax. In the event that that is not the case, this may cause a school to pay unwarranted taxes that could be avoided if the school director would have been more deliberate in ensuring that to get an ETIMS receipt on every purchase the school makes. Therefore, it is critical and quite important that all purchases that are made by a school need to be backed up by ETIMS compliant receipt. If this is not fully implemented, when it comes to filing the return, probably for the year 2025, after the end of the current financial year, since the law took effect from January of 2024, a school might find itself in a position where the taxes payable are significantly high compared to their true financial position, solely by the fact that the expenses were incurred. However, the expenses that were incurred by the school did not take measures to ensure that they get an ETIMS receipt on every purchase. So it's critical that in any purchase that the school makes, they ensure that they get an ETIMS receipt. Over and above that, they must ensure that the ETIMS receipt has the PIN of the school. I'll proceed on to the next slide. I'll take you through pay as you earn. This is a tax payable by the school from personal emoluments and allowances that accrue to both teaching and non-teaching staff. This tax is payable by the 9th of every month with a graduating scale as indicated in the table below. This expense of pay as you earn is exempt from the requirement of ETIMS, since these are basically salaries that you pay to your teaching and non-teaching staff. Currently, anyone who earns income of between the first tax bracket on the first 24,000 shillings is taxed at a rate of 10%. What this means is that each of those employees is also entitled to a personal tax relief of 2,400. Therefore, anyone who earns between 1 shilling and 24,000 shillings in a month does not pay any pay as you earn. However, the amount that is taxed is the amount that is over and above 24,000 within the provided tax brackets. Therefore, it is very advisable that schools purpose to include their staff in their pay-as-you-earn returns that are filed on a month-to-month basis. That way, if a school incurs expenses for staff in regard to pay-as-you-earn, then at the end of the year, they are mandated to claim that expense. They are well within their rights to claim that expense, and this would be an expense that would not be questionable as long as the school has filed all their returns on a month-to-month basis. They will be justified to claim that expense in their monthly returns. So for instance, if a school is paying salaries of, say, about 100,000 a month, but are only declaring 50,000, then it means that at the end of the financial year, they will lose out on an expense of 50,000, which would have played a big role in reducing the tax payable, since the tax payable is computed on profit. So pay as you earn in terms of salaries is an expense that a school should make effort to ensure that they are well captured, well documented, filed in the monthly returns. That way, at the end of the year, the school is able to save on its costs by bulking up the expenses, which would include the actual salaries that the schools have incurred. In scenarios where schools might have incurred expenses on pay-as-you-earn or expenses in salaries for both teaching and unteaching staff, and they have not declared that statutory return, it would mean that at the end of the year, any expense that they claim, for instance, if they have incurred an expense of 1 million shillings and they want to claim that at the end of the year, in the event that they have not declared that 1 million shillings in the monthly returns, then it would mean that that expense would be disallowable by virtue of the fact that the school did not file their monthly return. I'll proceed to review other statutory deductions that are relevant to the schools. The government, through the Finance Act of 2023 and other legislative mechanisms, has introduced other taxes that are payable from the basic pay of employees apart from the pay-as-you-earn tax. This includes, number one, the housing levy. The housing levy was introduced by the Finance Act of 2023. Both the employer and the employee are each required to contribute 1.5% of the basic pay of the employee as a housing levy. What this means is that out of the employee's salary, the employer deducts 1.5%, and the employer also matches a similar contribution of 1.5%. This tax is payable by the 9th of every month alongside pay as you earn taxes. So in filing the 9th of every month, at the 9th of every month, a school is required to file its pay as you earn returns. Concurrently, in filing those pay as you earn returns, they will also be required to file housing levy, which will be computed in 1.5% of the employee's salary, and then the employer, which is now the school, will also match that at 1.5%, and this will be fileable and payable by the 9th of every month. Over and above that, the next item is NITA, known as National Industrial Training Authority. Previously, the returns for NITA were filed separately from the pay returns, but currently, as you file the pay returns, you also have to file the NITA returns. This tax is payable by the 9th of every month alongside pay to KRA. It is paid at a flat rate of 50 bob per employee. So the NITA computation is usually 50 shillings per any employee you have on your payroll. And this 50 shillings on the payroll is not deducted from the employee's salary. this amount is contributed by the employer. So this cost is borne by the school and not necessarily deducted from the employer, from the employee, sorry, and it has to be filed and paid by the 9th day of each month. The next statutory deduction relates to NSSF. This is a form of tax or statutory deduction imposed on both the employer and the employee at a rate of 6% of the employee's basic salary up to a maximum of 36,000. This means that both the employer and the employee each contribute 12% of the employee's basic pay per month. What this means is that for every salary that is between 0 shillings and 36,000, the employer is obligated to deduct the employee 6% of that salary and remit that on behalf of the employee to the government. However, the employer will also be mandated to contribute a similar amount of 6% and match that to the employee's payment. So in any event that the employer deducts 2,000 from the employee, then the employer will also add a similar amount of 2,000. And then when making the payment to the government, they'll make a payment of 4,000. So previously, the contribution for NSSF was at a flat rate of Kenya shillings 200, being paid by both the employer and the employee. So the rates for NSSF prior to the amendment of last year were fairly affordable, where each employee was deducted an amount of 200. The employer would also match an amount of 200. An amount of 200, and the amount payable would be 400. And that was across board, regardless of your salary bracket. Anyone who was earning from 0 to even 1 million shillings, the contribution was 200 deducted from the salary and 200 contributed by the employer. However, with the new act, you find that it's basically 6% of your salary bracket. However, this 6%, currently it is capped at 36,000. So anyone who might be earning a salary that is over and above 36,000, in computing the NSSF payable, you'll only compute 6% of 36,000. NSSF contribution are payable by the 15th of every month. So unlike the returns for payee or NHIF or any other return that are usually fileable by the 9th of the month, these statutory deductions, particularly NSSF, is usually fileable and payable by the 15th of every month. It is mandatory for every school to pay NSSF contributions for its employees. So registration, the school, however, needs to register for an NSSF number as an employer. So for a school to be able to file and pay the NSSF contribution, the first point of action would be to register with an NSSF, with NSSF to get an NSSF number. When the school is making that registration, they submit all the relevant documents, which includes like the registration documents as well as their payroll data. And then after the registration, the school is assigned an NSSF number. The moment the school is assigned an NSSF number, it would request for the NSSF numbers for each of their employees on the payroll. That way, on a month-to-month basis, through the school's NSSF number, they would remit the payment for each of their staff to NSSF by the 15th day of that month. So it's important that for a school to be able to file the NSSF returns as well as make payment for NSSF, they would have to register for an NSSF as an employer. And at times you find that you could find a scenario where schools are already registered for NSSF, but they are unaware. So, because at the point of registration, at times you could find that a school was registered for NSSF, but since they have not been filing their returns, they are unaware that they are duly registered for NSSF until a point where they might make inquiries that they want a certain service from NSSF, or they're trying to register, that they receive that they are notified that the registration might have occurred a little bit earlier on. The next item on our presentation is primarily NHIF, National Health Insurance Fund. This is a statutory deduction from an employee's salaries towards health insurance. Currently, this is done through the NHIF Act, which provides a fixed contribution per salary bracket as indicated below. The current the current contributions for health insurance are done through the NHIF Act. The NHIF Act provides fixed salary brackets for contribution depending on your salary pay. This NHIF is usually fileable also by the 9th of each month. So by the 9th day of each month, you file your return. A school would be required to file their returns with NHIF and remit that payment by NHIF. In the event that that return is not filed by the 9th day of each month or paid by the 9th day of each month, a school is penalized for failing to deduct or failing to remit those payments within the stipulated timelines. It is, however, it is worth noting that after 1st July 2024, the new rate of 2.75 of the basic salary for SHIF will take effect. So currently the Health Insurance Fund is effected through the NHIF Act. However, there was a resolution to change from NHIF to SHIF, which is the Social Health Insurance Fund. So the current deductions of NHIF are based on specific salary brackets as per the provided table. However, the NHIF, the Social Health Insurance Fund, which ought to take effect from 1st July 2024, would be structured to be a percentage of the basic pay of an employee. So that percentage would be 2.75 as opposed to where currently the rates are fixed per salary bracket. Also, currently the maximum contribution for NHIF is fixed at 1,700 shillings. But with the 2.75 contribution, they have not provided a cap or an upper limit on the NHIF contribution, which would mean that someone earning even up to 1 million shilling will still be charged NHIF at 2.75% of their basic pay. It's also worthwhile to note that in regard to NHIF, the amount that is payable from NHIF is not necessarily a cost to the employer. This amount is deducted from the basic pay of the employee, and then the employer serves as an agent whereby they deduct the amount and remit the amount to the government on behalf of the employee. What this means is that it's not particularly a cost that is borne by the employer, since this amount that is being paid by the employer was deducted from the employee's salary. I'll proceed to take you through an overview of the iTax platform. This is a digital platform used by KRA to facilitate filing of taxes by taxpayers. Every taxpayer or person with a KRA PIN is required to open an iTax account. Once the account is created, the taxpayer logs into the KRA portal using their PIN as the username and inputs the password. So at the point of a taxpayer who has forgotten the iTax password can prompt the iTax portal to reset the PIN. When this happens, the iTax portal generates a new password and sends it to the email address linked to the affected KRA PIN. In the event that a taxpayer does not remember the email address that is linked to KRA, they can prompt KRA to replace the forgotten email address. What happens with the iTax platform is that at the point of registration of a KRA PIN, a taxpayer is required to submit an email address, that an accessible email address that serves as their point of reference for that KRA PIN. In a scenario where a taxpayer might have forgotten the password, then they always just go to the iTax platform, enter their KRA PIN number, and then prompt the system to send updated credentials to the registered email that they provided at the point of registration. However, in the event that maybe a taxpayer cannot remember the email address that they provided at the point of registration of their PIN, they can always prompt or visit any KRA office or Huduma Center and facilitate the update of their email from the previous email to an email that probably they can currently access. In a scenario, a taxpayer may also be aware of the email address linked to the KRA PIN, but fails to remember the password. This makes them unable to access the new iTax password sent by KRA to the registered email address. In such a situation, the taxpayer needs to prompt KRA to replace the linked email address altogether. It is also worthwhile to note that all filing of KRA taxes happens through the iTax platform. What this means is that all the various taxes that I have mentioned in regard to pay, in regard to income tax, in regard to housing levy or NITA, are all filed through the iTax platform. So each school or any taxpayer would have access to an iTax platform where the username is their PIN and their preferred password, and all the statutory returns relating to KRA would be fileable on that iTax platform. And some of those taxes, school taxes filed through the iTax platform, include income tax, pay as you earn, housing levy, as well as NITA. The only statutory returns that are not filed through the iTax platform are NSSF and NHIF. Those are filed through specifically, currently they are filed through, NSSF is filed through the NSSF platform. NHIF is also filed through the NHIF platform. And I think that marks the end of my presentation. We can proceed to take about a 10-minute break, and then I'll invite Daktari to come and take you through the section on eTIMS as we prepare to take any questions at the end of our presentation. So anyone who has any question or inquiry, feel free to raise it through the chat section. And at the end of our presentation, we'll make time and respond to each of those inquiries. Thank you.
Welcome back from the second break and the final break. I will take you through the last section of eTIMS. And thank you very much, CPA Walter, for taking us through the various types of taxes from that are payable by schools, from income tax to NSSF, NHIF. You also spoke about NITA. Many people don't know about NITA, and therefore NITA is not very much complied with. Recently, KRA actually made it easy for businesses to file for NITA because because now it has been made part and parcel of the filing system for pay as you earn. So the screen I've shared is on eTIMS. No, not yet. It is. You are currently sharing the screen. It is now okay. Okay. eTIMS. I put a full slide so that it can be better visible. Okay. So eTIMS. eTIMS means electronic tax invoicing management system, and is a digital tool that KRA is using to facilitate the transmission of financial transactions on a real-time basis from the business to KRA. The main purpose of eTIMS is to enhance tax compliance by increasing financial transactions visibility from KRA's perspective. Prior to the introduction of eTIMS, cases of tax evasions were on a record high, and businesses were not paying attention to existing legal avenues at their disposal, useful in tax avoidance. So basically, there was a public outcry, and from the KRA perspective, because of the increased cases of tax evasion. We can remember the issue of the missing trader. The missing trader is when someone who's doing a contract with the government, for instance, has been given a contract to do a certain road. You are paid about 10 million. And since you did not buy ballast or your raw materials from a registered taxpayer for cement, for ballast, for cement, for steel, then you go somewhere along River Road, you get someone who is not in business to give you a fake KRA receipt. But those KRA receipts were not fake because actually they were a genuine KRA pin had been used to register for VAT, and someone had bought an ETR machine, and any other time you would tell him to process for you a purchase receipt of even 10 million, even 100 million, they would easily do that. So KRA would wait for this person to file the returns, the person who has given you this purchase receipt, and those people, of course, they were never filing. And KRA realized that there was a huge scam going on. And that is the reason why we now moved away from the issue of ETR to TIMS, which is a device that was called the TIMS Tax Invoice Management System. And this device is the one that people were asked to buy it at a cost of about 50,000, so that you could be able to process ETR or VAT receipts. There was a public outcry that the machine was very expensive, and that led to introduction of eTIMS, Electronic Tax Invoicing Management System, which is a free software that is provided by KRA to help people file their taxes. So types of eTIMS, there are mainly two types of eTIMS. One is the desktop version, and the other one is the online version. The desktop version, this is a type of eTIMS that is applicable to businesses dealing with commodities as opposed to services. These businesses include hardwares, supermarkets, and farming businesses. This version requires the taxpayer to have a dedicated electronic device like a desktop, computer, laptop or a tablet for purposes of generating e-Teams receipts to their clients. So you remember I've just spoken about the issue of Teams, which is a tax invoicing management system. That time before we moved to e-Teams, there is a gadget that was being sold by KRA licensed outlets that was selling these machines. And actually moving from the ETR, because originally we started from ETR, electronic tax register. That machine, the only problem with that machine, it was not internet enabled. So KRA, they didn't have the visibility of the business transactions. And therefore they said, they introduced this machine called Teams. And Teams was basically an ETR machine that was internet enabled. Now, the machine became very expensive and we moved to e-Teams, which is considered to be a free software. However, it is not free as long as you are not dealing with a service-oriented business. Because if you are dealing with commodity or a product-oriented business, you are supposed to have a dedicated machine where KRA will give you will configure that machine for you so that you can use that machine basically and generally for purposes of generating e-Teams receipt to your clients. It is very important that for desktop version, the e-Teams software is machine specific. You cannot be able to use any other machine to generate e-Teams receipts apart from the machine that you delegated for that task. And KRA actually asks for the serial number of that machine. So for people operating in that space, it is still quite challenging for them because small hardwares, small supermarkets, small shops, they are still being affected adversely by this requirement for them to have a dedicated machine. However, for the majority of us who are in the school business, it is not a problem because the school business is supposed to register for online portal version. The online portal version is a type of e-Teams that is applicable to a school business and any other service-oriented business for that matter. The school or a business that is operating in this domain of service-oriented business does not need to have a dedicated electronic device or computer for purposes of generating e-Teams receipt for school fees payments. So any gadget, anywhere, if you are an architect, if you are an engineer, a lawyer, any consultant who is not dealing with the physical goods is required to register for online portal version. So school revenue and e-Teams. This is very interesting and I'm very passionate about it because directors of schools need to understand that school business is very special and is not like any other business like hardware or a supermarket. Why do I say so? I say so because of something that I will explain about NEMS. So the school director is required to issue e-Teams receipt for all the income received by the school, whether it is the school fees income, whether it is food income, whether it is a trip income, any sort of income is supposed to be received through e-Teams. Failure to process e-Teams receipt on income received is illegal and contravenes the law requiring and mandating transmission of financial transactions on a real-time basis to KRA. And we have started to see KRA actually summoning the taxpayers who have already been registered for e-Teams, but they are not using e-Teams platforms to remit and to transmit their financial transactions with their customers. So it is highly advisable that once you register for e-Teams, ensure that you use it, because if you don't use it, chances are you will be summoned by KRA and they will want to have a look at your bank statement and see whether it is true. If you are purporting that you are not in business or you are not making sales, is it true? They would want to have a look at your bank statement, your M-Pesa statements, and till and pay bill statements. Again, we will discuss about that in detail when I come to discuss about the Data Protection Act and the proposal by KRA to be exempted from the provisions of the Data Protection Act. So when it comes to eTIMS and NEMIS, it is worth noting that KRA has the ability to know how many students a school has through the NEMIS platform. And that's why I was saying a school business is not like hardware. KRA already has the feasibility of how many clients in regards to students that you are serving in your school. What is NEMIS? It is a tool used by the Ministry of Education to manage both pupils and students' individual education progress and performance. So every school, and it is illegal for any school to host any pupil or a student without registering them for NEMIS. So there is no way that a company, a school would be able to hide that fact from KRA. Therefore, a school business is not like a hardware where the trader has the ability to under-report the number of bags of cement sold. E.g., a hardware person may decide to say that I didn't sell 100 bags, I sold 50 bags. It is very hard for KRA to verify that information, but for a school, and that's why we are having this webinar, because at the end of the year, it will be very hard for a school not to pay its right share, its fair share of taxes, because the feasibility is high. And it's good that we have created this webinar on time, though I've seen some questions which we will respond to. What happens to the schools that were not compliant on eTIMS for first term? It's an issue that we will handle towards the end of the presentation. Data Protection Act and eTIMS. KRA, through the Finance Bill 2024, is seeking to be exempted from the regulations and provisions of the Data Protection Act that prohibits the sharing of personal and confidential data information regarding a taxpayer. So what KRA is seeking to be assisted with through the current finance bill that is being debated is to be given a through pass, a direct pass, that if it suspects a certain taxpayer is not being honest, then they will have the authority to just do a simple email to your banker and say, could you kindly assist us with the bank statements for every other bank account that it is registered under this KRA PIN. And you will not have the right to question KRA, why did you invade my privacy? So through the Data Protection Act, KRA are requesting for it to be amended for them to be given a special treatment. This means that KRA will have full visibility of all school income and financial transactions. And it is very important that on one hand, KRA is able to know how many students that you have in the school because of NEMIS. And on the other hand, through the Data Protection Act, they can be able to see your bank statement and see how students are paying school fees. So even if you hide if someone has the idea of not showing or presenting the actual fee structure statement, then KRA will still be able to see, I can see a lot of transactions have been paid in 50,000. So it must mean that the school fees for quite a number of students is 50,000. So there's that visibility. Before eTIMS, schools were not really exposed, and most schools would pay taxes, but more often than not, they would not comply 100%. But with the new taxes, with the new changes, then it will be very hard for a school not to pay 100% of taxes. So this leaves no room for a school director to choose what to declare or not, as long as such transactions have gone through eTIMS or formal financial system that includes financial banks or commercial banks, SACCOs, and telecoms. eTIMS on expenses, very important. And this is where I had tackled when I was explaining about business transactions and consumer transactions. The school director needs to be aware of the fact that only the expenses that are eTIMS compliant will be accepted for purposes of computing the tax payable by the business at the end of the year. Only expenses that are ETIMS compliant. Again, I've seen very valid questions about what happens about expenses that are not ETIMS compliant. For instance, maybe salary. For instance, bank charges. If you are paying some interest on a loan facility, we will be able to answer all those questions towards the tail end of this presentation. The director should not only demand for an ETIMS receipt, but should also equally ensure that the KRA PIN for the school appears on that receipt. So the ETIMS receipt has got two pins. It has got two pins, the pin of the seller and the pin of the buyer. Ensure that the ETIMS receipt that you have has those two KRA pins. This happens. Unfortunately, one can still receive an ETIMS receipt that ends up being disqualified by KRA. It's very important. You can have an ETR receipt. It has your PIN as a buyer and it has the PIN of the seller, but it still ends being disqualified by KRA. Why? This happens if such a receipt was produced by a TIMS. What is TIMS? Tax Invoicing Management System. If that receipt was produced by a TIMS gadget while offline, if the gadget was not connected to the internet. We said we moved from ETR, Electronic Tax Register, and we went to Tax Invoicing Management System. There's that machine. And now currently we have upgraded to ETIMS, but there's people who are still using this machine referred as TIMS, and it is legal, it is allowed. But now the problem with this TIMS gadget, it has the ability to still generate a receipt even when it is not connected, even when it is not internet enabled. It has the ability. And it is a mistake the manufacturers of those machines did, because if it produces a receipt when it is not internet enabled, if that receipt is considered invalid, then it would have been very critical or crucial for that machine not to be given that ability. So every other time you receive an ETIMS receipt, it's very important, especially from the petrol stations, because they are the ones that are moving around with those TIMS gadgets. Ensure that in your phone, you have downloaded a QR code scanner, and every ETIMS receipt has a QR code, has a QR mark, and you project the scanner on that QR code, and it will be able to verify for you instantly whether that transaction has been remitted to KRA on real-time basis. So ensure every other time you are given an ETIMS receipt, especially the one that is coming from a TIMS machine. It is a small handheld machine that usually you will find it in petrol stations. Ensure that you scan it and ensure that that transaction has been transmitted. So to avoid such a situation, the director should scan the QR code. So example of expenses that the school should ensure that they are ETIMS compliant. Basically, it's all expenses, apart from a few of them that I will take you through towards the tail end of this presentation. So example of expenses, it could are not limited to the following: fuel expenses, cereals, vegetables, fruits, stationery, uniform, school repairs and maintenance, including when you take your car or the school bus to a garage. Ensure that the mechanic gives you an ETIMS compliant receipt. Maybe as I explained that, in case the mechanic does not give you an ETIMS compliant receipt, you still have a choice. There's a technique or a mechanism that is still being processed by KRA. It is yet to become effective, whereby a taxpayer or the buyer will have the ability to do reverse invoicing. Instead of waiting for the seller to produce an ETIMS receipt for you, you can reverse invoice. As the buyer, you will have the ability to initiate that purchase, and then in that purchase, you will include the details of the seller and yourself as the buyer, and do reverse invoicing so that KRA is able to capture that transaction in the event that the seller is a mama mboga and is not able to produce, to give you an ITIMS receipt. Nevertheless, still, you can use a technique called withholding tax. If you are paying a mechanic 10,000, and this mechanic is not able to give you an ITIMS compliant receipt, what you can do, instead of paying him 10,000, you can deduct 2% of that 10,000. Let me use 100,000 so that it is easier. If you are paying him 100,000, you deduct just 2,000, you pay him 98,000, and by you deducting that 2,000 and processing for him a withholding tax, KRA will, by doing that, you will be notifying KRA that I have paid a certain mechanic a total sum of 100,000, but I've only paid him 98,000, and the 2,000 that you have retained, you submit it to KRA. And by doing so, you are informing KRA that there's a taxpayer that have paid 100,000. Please wait for him towards the end of the year and see whether he will be able to disclose and declare that income that he has generated from me. So there are many ways of catching the rat. They keep saying that it doesn't matter whether the cat is black or white, as long as it has the ability to catch the rat. The Excel sheet, ITIMS and filing of income taxes at the end of the year. Now we have come towards the end of the year, and now we want to file the income tax. As my colleague CPA Walter said, the end of the year depends on when your year starts. There are some companies whose end of the year is in April, because the start of the year is March. So it doesn't have to be the normal calendar year. You need to engage a tax consultant to check for you. Sorry about that. To check for you when is the end of the year for your PIN. It is referred the end of the financial year as opposed to a calendar year. So in the Excel sheet that KRA will send you at the end of the year, it will include all sales that were transmitted to KRA via ITIMS, and also the purchases that took place on the same platform. Upon downloading the Excel sheet, it is possible to add more sales, and I believe I had taken you through this bit, that it is possible to add more sales to the Excel sheet in case you notice that some income had not been captured or reported or acknowledged by the ITIMS system. So what we are saying, KRA is very smart, and of course their vision, their objective is to collect as much taxes as possible. So at the end of the year, we will not do the normal filing, because KRA will actually bring to you through an Excel sheet. They will send an Excel sheet to the email address that is registered against your PIN. And it is very important that you know that email address. If you don't know, like my colleague CPA Walter said, there are mechanisms that you can use to be able to know, or even to replace that email address. So once you get that Excel sheet, it will not be possible for you to deduct any sales, but you can be able to add any sale that was not captured by KRA. Similarly, you can delete some of the expenses appearing on the Excel sheet, but you cannot add more expenses. So that Excel sheet that you'll get at the end of the year, if you want to add, to reduce the purchases that are declared or are appearing on that Excel sheet, you can do that. Because the essence of doing that, it means you want to pay more taxes, and the KRA will allow you to do that. What KRA will not allow you to do is to reduce the purchase, is to increase purchases, because the increasing purchases over and above what the Excel sheet provides, it would mean that you want to reduce the tax payable to KRA. So only the expenses that were effected through the ITIMS system will appear on the said Excel sheet. want to go to the next slide. We are nearing the tail end. So special e-Teams expenses, these are expenses that will still be deductible for computation of tax payable at the end of the year, even if they are not e-Teams compliant. Special e-Teams expenses, there are a few expenses that will still be considered valid, even if they will not be supported by e-Teams receipt. They include emoluments. These are basically salaries. But as CPA Walter insinuated or actually advised, is that for emoluments to be considered valid, you need to have used the other system of KRA. It's good to understand that KRA has got two systems. It has the iTax portal and it has the e-Teams system. So emoluments, salaries through pay as you earn are declared to KRA through the system of iTax. When you are filing pay as you earn, ensure that you don't only file taxes or you don't only include employees that are earning above 24,000 when you are filing pay as you earn. Even if you have an employee, you are paying 10,000 for whatever the reason, ensure that you include that employee in that Excel sheet for pay as you earn. And the system, that Excel sheet is configured in a way that it will not tax that person, because the tax that that person is supposed to pay is less compared to the tax relief that is offered to each and every taxpayer by the government. The tax relief is currently 2,400. Someone who is being paid 10,000 would pay 10% of 10,000, which is 1,000, but this 1,000 is less than the tax discount that this person has already been offered by the government. So ensure, it's very important, ensure that you put all the expenses of salary in that particular sheet for the emoluments, including if you are giving your employees any salary benefits. It could be airtime, it could be food allowance, especially for teachers who are given some money to eat for lunch, or to buy lunch with, or that anything that is given to the employee should be indicated there when you are filing for pay as you earn. Imports, even if you don't have e-Teams receipt for imports, you will be exempted. Of course, for the sole reason that you bought something in Germany, you bought something in China, and the person who was selling to you was not e-Teams compliant and was not mandated to comply with the laws of Kenya. So imports will be exempted. Investment allowances, and this is very important for school owners. It is very important, investment allowances, that if you buy a school bus, this school bus is supposed to be awarded tax incentives by the government. If the school bus is worth 100,000, it's just a case in point, an example, and it is estimated that the economic life for this school bus is 4 years, then every year you are supposed to claim a cost for the use of that bus to generate income that you are finally basing your taxes that you are supposed to pay to KRA at. So if the bus is 100,000, and I will really want to simplify this, and we have said it is 100. You have bought it at 100,000, and the estimated economic useful life of this bus is 4 years. So every other year, if you say 100,000 divided by 4, it is 25,000. So before you pay taxes to KRA allows you to deduct that 25,000 and put it aside in year 1, so that in year 2, another 25,000, year 3, 25,000, and year 4, 25,000, so that by the end of the 4th year, you will have accumulated some savings that can enable you to buy another bus and continue for you to be able to continue to pay taxes. So these allowance investment deductions, of course, they will not be given e-Teams for, because it's a deduction that you are doing in-house. But, and there's a huge but, For this investment allowance to happen, the bus that we are talking about, it must be registered under the name of the school. And this is where we have a problem that most schools, they buy assets using the names of their directors as opposed to using the name of the school. And the name of the school is not only the name of the school, but also the PIN that is registered, the KRA PIN that is registered against those assets. So if you have a school bus and it is registered under your name or not the name of the school, and you have continued to claim investment deductions from that investment, then if KRA become aware of that fact, then they will be able to reverse all the benefits that they have given you in regard to that asset. Equally, if you are doing a school building, you are given tax incentives by KRA in the form of investment allowances. But you can only qualify for those investment allowances if the school is registered, if that building, is registered under the name of the school. And that parcel of land is registered under the name of the school. And that building has got all the approvals that appertains to building of a school. That's the only time you will be able to qualify for this investment allowance for the building that you have done for the school. And it is a huge amount of money. You can do a lot of savings by ensuring that you are compliant in regards to investment allowances. Because technically, even if the building is for 10 million, the KRA will allow you to deduct that cost of 10 million over time. But if you are not compliant, then you lose that benefit. The other expense that you will be able that will still be considered valid, even if it is not supported by an ITIMS receipt, would be interest. This interest is you have obtained a loan facility, and the bank is charging you interest on that loan, which is a cost that usually ends up being taken care of when computing for profit and loss statement. So that interest cost will be acknowledged as valid. The other one is air passenger ticket. Air passenger ticket, again, that one will be considered as valid, even if you do not have an ITIMS receipt. And basically, it's because the airline services, they usually are offered by companies that are not of Kenyan origin. And I think we are getting to the tail end of this webinar. And I want to take you through the tax planning and ITIMS. You remember at the end of the day, we said that at the beginning of the webinar, we said that the school is under so much pressure to continue being profitable. And there are many taxes that are being introduced on the education platform, including some that are still underway. Like the element of VAT. The element of VAT, we saw the issue of bread being targeted for VAT. The school is likely to be next, and there's already a proposal at the National Treasury making attempts to impose VAT on non-tuition income, non-tuition school income. So tax planning and ITIMS. In the wake of ITIMS, tax planning as a strategy of reducing business running costs needs to be taken more seriously. As tax consultants, we recommend the following tax planning initiatives and measures. The school business is to be operated as a limited the school business ought to be operated as a limited liability company and not as a sole proprietor or partnership, because there are many tax benefits that accrue to a corporation compared to a natural person. And of course, if you want your business to not to be a personal investment, but a multi-generational investment, a business like Coca-Cola that is more than 100 years old, then you need to stop attaching your business with you. your business does not need to be you, and you don't need to be your business. So the best way to do that is to incorporate. And once you incorporate the business, it will be considered as a separate legal person, which is referred as an artificial person. Number two, to file for pay as you earn for all the employees, tax planning. What do you do so that you reduce your tax burden? What do you do? One, you file, ensure, and I've explained this, you ensure that you file to file for pay as you earn for all the employees of the school, including the ones who earn below 24,000. This is to ensure all the salary expenses are captured through the iTax system, which is a sibling or which is a sister platform to eTIMS. Ensure that you do that. And there was a question raised about that. I will address it, but generally, even if it is casuals, ensure every expense you have evidence that you did pay for it. It is worth noting that there are no pay-as-you-earn taxes for any employee earning below 24,000 per month, as the tax that such a person should pay is lower than the tax discount of 2,400 that is offered to all natural taxpayers by the government. I had explained that. And number four, to maximize for you to do proper tax planning, there are two items: tax avoidance and tax evasion. We are talking about tax avoidance. Tax evasion is illegal. How do you do tax avoidance? How do you avoid paying taxes illegally? So ensure to maximize on the use of employee allowances and incentives to reduce the basic pay of an employee and pay less pay as you earn, housing levy, and NSSF that are based on what an employee earns as a basic pay. What do I mean by that? You could be having an employee that you are paying 25,000. You can decide to call it basic pay, but whatever you decide to call it, it is upon you. What matters to this particular employee is at the end of the day, he gets these 25,000, of course, after deducting the taxes. But instead of, when you are preparing your payroll, instead of reporting this as 25,000, it is allowed by law that, excuse me, that instead of reporting it as 25,000, you say 25,000, out of this 25,000, 3,000, I pay this teacher 3,000 for purposes of buying airtime, so that when this teacher is at home during in the evening, and some parents whose children had been given assignment would want to call the teacher and get some instructions about how that assignment will be done. So to ensure that you reimburse the teacher from making such calls in the evening, you usually pay this teacher 3,000. So the basic pay will move from 25,000 to 22,000. You can as well say from the 22,000, 4,000 is the amount I provide per month to my teachers so that they can choose to eat lunch either from school or from other shops that are around the school. So in such a case, you will be able to reduce the basic pay as far as KRA is concerned from 25,000 to 17,000. And this is very much legal. And what matters is what the employee will get at the end of the day. Remember, if you can be able to save this to a number of, actually all the employees, you are able to reduce the basic pay from, let's say, from 30,000 to around 20,000. And what that means, because most of the taxes are being computed based on the basic pay. For instance, housing levy. Instead of now basing the housing levy on 1.5% of 30,000, once you have utilized the allowances, you will be computing 1.5% of 20,000. Instead of computing 6% of 30,000, which you are also supposed to match that contribution for NSSF as an employer, then you'll be basing it on 20,000. Instead of, and there are other tax benefits or allowances that you can claim for taxes. For instance, the per diems. Currently, an employee is is given a per diem up to a maximum of 2,000 per day when this employee is required to work out of his usual workstation. For instance, maybe it is during the games, and you have asked the games teacher and some other teachers to go to Mombasa. They will spend 2 days away from school or 3 days. So you give them an allowance of 2,000 per day. That per diem will be tax exempted. So, and the government through the Finance Act 2024, it actually wants to broaden that per diem. Instead of being calculated as a flat rate of 2,000 per day, it will be, if this finance bill is approved as it is, then it will be calculated as 5% of the monthly salary of the employee can be given to such an employee on a daily basis as per diem. It's very important. So to maximize the use of, I've discussed the number 4. Number 5, for instance, an employee earning 24,000 can be captured. I've explained that very well. Number 6, utilization of interest on loans in reduction of tax payable. It's good to understand and to remember that interest on loans is a cost to the business. What do I mean by that? If you borrow 10 million from a financial institution, you will not pay back that amount of money as 10 million. Maybe over time, a period of 5 years, you will pay it back as 15 million. So the extra 5 million that you are paying to that financial institution as interest, it is supposed and it is considered and acknowledged as an expense to the business. So sometimes when the directors are filing income tax, they forget to remember that they have a loan facility somewhere and they are paying expenses in terms of interest for that loan, which should actually be utilized for the right purpose. But again, excuse me, that loan should be in the name of the school. If you take a loan in the name of your personal name as a director, then when you are filing taxes for the school, you will not be able to take advantage of that. And that's why it is very important to ensure that business operations are done from an umbrella, from a company umbrella, and not done on the individual PIN of the director. Checking the tax status of the KRA PIN, we are talking about tax planning. You need to check the tax status of your KRA PIN for the school and for and those of the directors. This is to confirm if the said PIN, as you speak right now, have accrued penalties either for non-filing of returns or unpaid principal taxes. In case it has those penalties, in case there are such penalties, the taxpayer should apply for a waiver, that is forgiveness of such taxes, before 30th June 2024. This is a window that was opened through the passing of the Finance Act 2023. And the KRA, through the Finance Act 2023, it gave a provision that for any person who owes KRA any principal taxes, you are supposed to pay those principal taxes and be forgiven any penalties that had accrued for non-payment of that principal tax. So just pay us the principal tax, and any penalties, including if it is to the tune of millions, we will forgive you. And we have assisted clients and taxpayers who had huge penalties with KRA to have their penalties forgiven. So please note that this window is being closed by 30th June this year. 30th June this year. And if we are talking about tax planning, it is a window that has been opened. Ensure you take advantage of it. And when you are claiming for those for forgiveness of penalties, it's good to remember it's only penalties that had accrued on your PIN or the PIN for the school before that 1st December 2022. Before that 1st December 2022. So any other PIN that accrued after that 1st December 2023, January 2023, February, it will not be forgiven. But anything before December 2022, you have a right to be forgiven. but you are right, is not an absolute right, and its lifespan is fast getting depleted. Lastly, it is worth checking the terms of the existing loan facility and compare with what is being offered by other commercial banks. Sometimes you may realize that the interest rate on your loan is higher compared with what other banks are offering. This could be as a result that you applied for the loan when the interest rates were high and the banks failed to reduce your rate even after when the central bank rate was reduced. You know, the kind of loan regime that is used here in Kenya is that the interest rate on your loan fluctuates. When the CBK rate is high, then the interest rate that you are paying on your loan also goes up. For instance, because currently the CBR is at 13%, it is very expensive to obtain a loan at this moment because you will get it at a rate of about 22%. But a few months later, when the CBR goes down, maybe from 13%, where it is right now, to about 9%, then the interest rate of your loan should reduce from 22% to around 18%. So should your bank not adjust it accordingly, then you have the right to go have a discussion with your banker. And if they are not willing to do that, you can consider to refinance it with another bank that is willing to give you at a lower rate. And it's also good to insist that we have the microfinance institutions and SHYLOCs, and that they will lure you and tell you that we can give you a loan at a flat rate of 15%. They usually say at a rate of 15%. Most microfinance institutions, they say 15%. And they tell you, if you do your research and get back to me, you will find out that the commercial banks, they are offering such a loan at a higher rate of return, at a higher interest rate, maybe 22%. And it is true. Commercial banks currently, they are offering at an average of 20% interest rates. And if you go to microfinance institutions, they will give you the same loan at a rate of 15%. So the question is, does it mean that it is advisable you go for a loan facility from microfinance institution that is giving you at an interest rate of 15%? Or should you go to a commercial bank that is offering you the same amount of money at a higher rate of 20%? My answer to that is that you should not borrow from the microfinance institution. You should borrow from the commercial bank that is offering you at a rate of 20%. Why? Because microfinance, there's something that they don't tell you. When they say 15%, there are two types of rates that are used to value loans. There is a flat rate, and that's what microfinance institutions are charging you at 15%. And there is reducing balance rate at 20%. The 15% flat rate, actually, when converted to reducing balance rate, it is equivalent to about 24%. So 15% flat rate may sound to be cheaper, but when you convert that into reducing balance rate, it will come to around 24%. So the banks are giving you at 20% as it is, but microfinance is giving you at 24%, 4% higher, but they are very wise. They are not telling you as it is. They will tell you it is 15%. So it's good that you engage a tax consultant, a financial consultant, especially when you are making these capital decisions that are capital intensive, and usually they are irreversible in nature. So in such a situation, we would recommend refinancing such a facility as it would save the school business a substantial amount of money on reduced interest payments. And in conclusion, this far, we have covered various aspects of school as a business with respect to ETIMS. From the onset, the presentation focused on various forms in which a school business can exist, types of taxes, types of business transactions, among other key areas. This is a summarized version of the numerous areas where we can offer business support. Our services are geared towards increasing efficiency and effectiveness of a business with respect to financial perspectives, client perspective, internal system perspective, and organizational capacity perspective. What do I mean by organizational capacity perspective? Is when we train the decision makers of the business. So when they know better, they do better. And when they do better, when it comes to internal systems, they will be able to process, to offer services in a more efficient manner. If it is teachers that have gone through a CBC training, then these teachers will be more effective. And at the end of the day, in terms of the client perspective, the pupils, the learners will be very happy, the parents will be very happy. And when the customer is happy, the client perspective, whether it is the student or the learner or the parent, then the financial perspective also improves. What do I mean by financial perspective? That the profitability of that business increases. The return on asset, the return on equity increases. So as a business entity, Maina Kamau and Associate Consulting Firm, we put key focus on increasing efficiency and effectiveness of a business, that as opposed to slaughtering, to killing your goose that is laying the golden egg, we come in to ensure this goose is fed better, is given better shelter, is treated is put there, 0728-521159. And now we can open the plenary for questions. And I thank you profusely for giving us, for listening to us, for joining online. I will first address in the next 5 minutes or so, I address the questions that were raised through the chat box. And from there, I can pick other questions. But if we don't manage to answer your questions, please be advised that we will compile a report and answer which we will have answered all the questions that you have raised, and we shall be able to circulate to each and every person who has attended. We had shared the link to the invite link to this webinar on various WhatsApp platforms. So we'll do the same. We had reached out to you individually. We will ensure once we compile the report for the questions that you have asked, we forward the same to you within a week's time. But for anyone who wants to reach out for immediate assistance, kindly feel free to do so. So there's a question that was asked by Nancy Wanjiru. Please elaborate more on how we can't hear you. We are on break still. Please elaborate more on how NSSF Tier 1 and Tier 2 is calculated after the 6% on 36,000. So basically, Tier 1 for NSSF, it is based on a figure of 7,000. So any income that is below 7,000, from 0 to 7,000, it is considered as Tier 1. And as an employer, you are supposed to deduct 6% of that amount, 7,000, assuming he's paid the highest amount in that band, 6% of 7,000. And you also, as an employer, contribute an equal amount to match that figure and pay the total of your contribution and the employee contribution to NSSF by 15th of every month. In terms of Tier 2, since Tier 1 and Tier 2 are using the same tax rate, the same rate of 6%, so it doesn't matter whether you use the two tiers differently. Whether you first say that for an employee that is earning that 6,000, I will first tax for NSSF the first 7,000 at 6%, and the remainder, which is that 6,000 minus 7,000, 29,000, and tax it at 6%. It will still give you the same figure. So you can equally say that I will tax the entire that 6,000 at 6% without really giving consideration to which tier a certain part of income is classified at. So I'm trying to go through the questions that have been raised. There's Melanie. What if you started using eTIMS in April? What will happen to the expenses captured between January and March without eTIMS receipts? This is a very good question. Actually, as we are aware, the Finance Act 2023 put a provision that eTIMS was to take effect from 1st January 2024. However, by 1st January 2024, most businesses had not onboarded on eTIMS. So KRA gave a directive that it has expanded the compliance duration from 1st January 2024 to that 1st March 2024. So this is a directive by KRA that they said, if you have not complied with the provision to onboard on eTIMS, we are going to give you more time. But KRA and the National Treasury or the Parliament that passes law are two different institutions. So it is going to be very tricky, and we are waiting to be given more directive, whether it is the directive of the National Treasury through the Finance Act 2023 that required business to start compliance for eTIMS by 1st January 2024, or are we going to use the one for KRA that says it is that 1st March 2024? So there are still some gray areas that we hope we will be able to be advised accordingly by the government through KRA or through the National Treasury. Dennis asked, are we required to generate eTIMS invoices with the parent's KRA PIN, or do we transmit bulk invoices without the KRA PINs? It's a very good question asked by Dennis, but the point is you don't really need to capture the KRA PIN of the parent, because to the parent that transaction is a consumer transaction. The parent will not use that expense which he has paid to your school as a business expense somewhere else. This is an end user, and remember we differentiated between business transaction and consumer transaction. So from the parent point of view, you don't need to capture. You don't need to capture the detail of the parent. And it's a good question whether you need to transmit in bulk, or you need to do one by one. As it is, the law is requiring that you do one by one, but